Yes, good afternoon, everybody. Voice and also see my screen clearly. Today is 21st. This is 21st of April. So today I want us to look at some few indicators. What I want us to say is how you can be able to combine a given set of indicators to be able to get maybe the correct trend for that particular market. So what I'd like to say first is all indicators are almost the same. Like all the indicators you're using, they're almost the same. Either the indicator is based on division of price, multiplication of price, average of prices, or even addition or subtraction of prices. So when you see like the indicator you have on my screen, this is Bollinger Bands. There's 3 lines. This is the middle one. There is the upper one, and then we have the upper one, the middle one, and the lower one. So the one you see in the middle, this is just the 20 period moving average. There is nothing special to it. This is just the 20 period moving average, and then the line at the bottom is standard deviation of the one in the middle. So it's like even this is just a moving average, this is just a moving averages, but they are standard deviation of the middle line. So that's how basically most indicators are. If you want to understand indicators, you must know when to add prices, when to multiply prices, and when to subtract prices. So I want us not, we're not going to look at this, the one on my screen. We will look at two. We look at let me put a new chart on my screen. We look at the ADX indicator. I will put it on my screen. So to get the ADX indicator, just go to insert menu and then go to indicators, and then you move to trend, then you look for average directional movement index. If you're touching the screen, you'll be able to see, you'll see it now. This is how it looks by default. So this is not very clear. This is not very clear. Let me make it green and red so that we're able to see it clearly. Yes, and so these 3 lines, all of them mean the same thing. If you have the green line, the green line stands for an uptrend, the red line stands for a downtrend, and then the blue line, I don't know whether this is blue or light blue. This blue line means that trend is active. So the first thing you have to do to understand this clearly, you have to draw your line on the level 25, horizontal line, and then you draw it at 25.0. So when you have this line, this is how you interpret it. Anytime the green line is above the red line, that means we are in an active uptrend. So anytime you have the green line, this dotted green line above the red line, that means we are in an active uptrend. And what confirms if that trend is strong or not is this blue line. So the blue line, the one which is complete, this solid line, anytime you have the green line above the red line, then the solid line is above the level 25. That means we have an active uptrend, and that trend is upwards. So the first thing is we are in an uptrend, and how strong is that trend is indicated by this blue line. The same thing applies with when you're in a downtrend. When you are in a downtrend, we have the red line, this one. If the red line is above the green line, then that means we are in a downtrend. But it does not indicate how strong that trend is. So the first thing, we are in a downtrend. Then the line which now shows you how strong that trend is this blue line. So when the red line is above the green line, and then the blue line is above the level 25, then that means we are in an active downtrend. So the idea in this case will be to keep looking for sell positions. So you may want to play around maybe with the period for this indicator. You may want to play around with this. I don't know if they can see it. Just a second, let me see that. I don't know if they can see this. If you double click any line for this indicator, that if you download, when you double click this one, and then you go to the parameters list, you should be able to see where there is that name period. So period, you can write 14, by default it's 14. You can write 21. you write 21, then you can see that the way this indicator is drawn, it shifts. And then if you draw another one, maybe you draw another one at 52, you can see that it keeps shifting. And then if you draw another one maybe at 100, the more it keeps shifting. So ideally, the period is just the number of candles you want to find the average for in the past. So if you want to find the average for the past 200 candle, then the period you write 200. If you want to find the average for the past 20 candles, the period you write 20. By default, it is 14. So I would rather you remain with 14, like that. So how do we combine this indicator with the moving average? As I said before, the indicator you're seeing here, it has nothing special to it. It is still just the normal moving average put differently. We'll go here to insert indicators to add an indicator, and then we'll go to indicators. Then we move straight to this category where we have trend. Then you choose the moving average. So by default, the moving average comes to the period 14. The shift is 0. MA method is simple, and then apply to is always apply to close. So if I have to explain that, what that means is this. Period is basically the number of candles back. So from the first candle, the closing price for the first candle, the next one, up to the 14th candle. Then we find the average for those candles using the simple method. That is what the moving average stands for. So how you combine this with the one below the screen, or you combine the moving average with the indicator which I have on my lower screen. Always watch for cases where all of them are showing the same thing. So when you have like the moving average, the price keeps closing above the moving average. At the same time, the green line is above the red line. And then while that is happening, the blue line is above the level 25. And that means we are in an active uptrend. So whenever you have like you have the moving average and the ADX indicator showing you the same thing, the exact same thing, that means that's the most dominant trend at that time. So like in this case, from this instance here, we had the green line above the red line, and then for some time the blue line was below 25, and then it went above 25 around 4 in the evening. This is 4 in the morning, sorry, just a second. This is 4 in the morning, yes. So we can see that from this time the blue line was below 25, below 25, below 25 until 4 in the morning, that the blue line now eventually crossed above 25. So when this happens, when the blue line has crossed above 25, while the green dotted line is above the red line, and then the moving average is below the closing price of the previous candle, then that is a sign that you're supposed to buy immediately. So if you are watching this chart, this could have been the correct place to look for a buy from. This could have been the correct place where we want to look for a buy from. Technically, you could have bought it immediately this happened. This could have been the best place to buy from. Whatever I'm saying now, does it make any sense? So you avoid cases where, for example, the moving average is showing something else, at the same time, the ADX is showing something else. Such a case, you ignore it. Do not trigger trades when you're seeing opposite signal, because the ADX is the same as the moving average, just that it is shown on a different window. Like it's now below, it can also be shown above. Let's get another example for a sell. Okay, look at this point. From this point here, we had a cross. The red line went above the green line, but we cannot sell because the blue line is still below 25. So we have to wait until when the blue line goes above 25. That is here. So when this happens, when the blue line eventually climbs above 25, and at the same time the moving average is below where the price is, then there's a sell. You can see clearly that if you took a sell when that happened, you could have made really good money. When this happened, this was a good sell. You could have sold it at least up to this point. And the next example, we have this. So somebody may ask me, where do you exit if you enter trades like this? Okay, you exit when the price crosses above the moving average or when the ADX cross above. So like when you're selling, the red line must be above the green line. But if the opposite happens, that if the green line now climbs above the red one, then you step out of the trade which you had before. If it's a sell, you get out of it. If it's a buy and the red line has climbed above the green one, you get out of that buy. Or if there's a cross of the moving average, then you exit that position. The example is this. The example is this one. So this is like a downtrend. We have the red line above the green one, but the blue line is still below 25, so we cannot enter any trades here. We have to wait up to this point, and when that happens, you can see that the moving average is also below where the price is. So this could have been the correct place to sell from. If you look at this chart, this could have been the correct place to sell from. If you sell it there, keep that position open until when there is a cross of the moving average. This is when to get out. So somebody's asking, where do we have our stop loss if you enter the trade here? So the stop loss is always above the recent highest high of the recent lowest low. So if you sell it here, like this, if you sell it somewhere around this point, have your stop loss above this high. And if you are a bit generous, you should have your stop loss above the next high, which is this. So we have our high there, we have our next high there. You have your stop loss there, and then you have your stop loss above. If you don't place it there, maybe you think that the price may pull back and hit it, you can still set your stop loss at the top, which is here. Does that make sense, whatever I'm saying? So we have another example. This looks very good, this one here. So with this, we are in a downtrend. You can see that the red line is above the green one, but somehow the blue line is still below 25, so we can't enter anything. We have to wait up to when this happened, when the blue line has now crossed above the red one. So this is now the best place to sell from. This trade ended in a loss because you can see clearly that the price went down around 5 pips. This is 63 pips before it came back to close above. So if you had a floating take profit, then you could have been stopped out of this one. But if you're taking profits based on pips, that is how many pips the price has gone your way, then you had like 50 pips on this trade. I'm going to look at SP500 instead. So I'm looking at this here because it has a very good trend. It has been in a very good uptrend for some time. It will give us the best example. Okay, so look at it from this point here. We are in an uptrend. The green line is above the red line, but the blue line is still below 25, so we cannot enter any position. The price continues up, 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 up. It heads straight up to this point. So immediately this happens, immediately the blue line goes above the level 25, then that is the place to look for a buy from. This is the place to look for a buy from. You buy it there, you keep the position open, expect price to continue up as it is now. Maybe if you took that buy position, you are looking forward to getting out of that trade, especially if the moving average can close below the red line. Does it make sense, whatever I'm saying? The other example is on here. So in this case, you can see there is a cross, the ADX indicator crossed. So that's a buy signal. And at the same time, we had the blue line above 25. And at the same time, the price was above the moving average. So this was the correct place to buy from. This one. So as I've said just now, if you take this position, your stop loss must be below this low. Is that clear? If you take this position, your stop loss must be below this low. So expect it to continue up, expect a continuation much higher. And that means if you took the buy position there, you could have stepped out here then you look for another buy position here, then it continues up, you step out again, the price continues up, goes below, you step out, continues up, and then it goes below, you still step out, continues up, you buy it there, continues up, and then you step out. So that's simply how you combine these two moving averages. That is how you trade these two indicators. So this is how you combine the ADX and the moving average. Another thing, you don't have to use the 14 period moving average. You may try another one, maybe 21. This still works best. You can try 21. You can also try 52 period moving average, and you can also try 100 period moving average, 100, and then you may also try 200 period moving average. So these are some of the these are some of the numbers, periods which you're supposed to understand well. Understand how to combine the 21, 14, 52, 100, and 200 period moving average with the ADX indicator. The same thing applies to all of them. The same way we were interpreting the 14 period moving average is the same way we interpret the 200 one. So thank you very much. That should be the end of today's session. I will meet again next week at the same time. So thank you. See you.